Welcome back to the 20-Minute VC and a very special episode of Founders Friday with me, Harry Stebbings, at Stebbings with 2 B's on Snapchat. But why the very special show today? Well, we've had many people who've created companies on the show before, but very few who've created currencies. Well, today's guest has, and I'm thrilled to welcome Charlie Lee to the hot seat today. For those that don't know, Charlie is the creator of Litecoin, the most popular alternative currency to Bitcoin, which Charlie created as a side project in 2011 while working at Google. Today, Litecoin has a market cap of $3.29 billion. As well as creating Litecoin, Charlie's also the director of engineering at Coinbase, working alongside our recent 20-Minute VC guest and Coinbase founder, Brian Armstrong. Prior to this, Charlie held roles at Microsoft, Google, and Guidewire. I do also want to say a huge thank you to Brian at Coinbase for the intro to Charlie today, without which this episode would not have been possible, so we're very grateful for that. But before we dive into the show today, if you're an early stage startup, the right infrastructure and support systems are critical, and that's where First Republic is so good. First Republic's resources, network, and expertise allow entrepreneurs to customize a solid foundation for your business across all stages. So why First Republic? Well, you get to leverage their incredible network of VC firms to prepare you for future fundraising events. You get to count on a single point of contact that will be there for you and your employees when you need them. You get access to exclusive events and networking opportunities. But don't trust me on this. Their clients include the likes of Instacart, eShares, and Wish, just to name a few. Check it out by heading over to innovation.firstrepublic.com. And speaking of incredible startups there, one that really is a must is Segment. Why? Well, Segment allows you to collect data from every platform, mobile, web, server, cloud apps, and load it into Segment. Segment then sends the customer data to your tools and destinations, where it can be used most effectively. Destinations include email, analytics, warehouses, help desks, and with over 200 sources and destinations on the Segment platform, that can really empower your team. Segment really is the last integration you will ever do, and that's why the world's best companies use Segment to drive growth and revenue, including the likes of Atlassian, New Relic, and Crate and Barrel, just to name a few. Simply head over to segment.com to find out more. But I'm now thrilled to hand over the mic to Charlie Lee, creator of Litecoin.
3, 2, 1, 0.
You have now arrived at your destination.
Charlie, it's such a pleasure to have you on the show today, having heard so many great things from Brian at Coinbase, but thank you so much for joining me today, Charlie.
Thanks, Harry. Thanks for having me here.
I'd love you to kick off today with your story and how you made your first moves into the world of crypto and your starting point.
Sure. I found out about Bitcoin in early 2011 from an article about Silk Road, and I was really hooked on Bitcoin. Basically started reading all about Bitcoin and followed pretty much every news article, if there are any, and forum posts on Bitcoin, and fell down the rabbit hole. Mm-hmm. And then in October of 2011, I decided to start playing around with my own fork of Bitcoin, and I called it Litecoin. And I guess the rest is history.
I guess the rest is history. We mentioned Brian there. I do have to ask you, your time at Coinbase. I've spoken to Olaf about his. Talk to me, what were the big takeaways from you from that experience at Coinbase?
I joined Coinbase in 2013 because I wanted to go all in cryptocurrency. I saw that Coinbase was a great company trying to make Bitcoin easy to use for the mass, and it was a really compelling thing. I think that for Bitcoin to succeed, it has to be easy to use, right? You can't expect everyone to be able to store their own Bitcoins in their own computer or paper wallet and be able to secure it. So Coinbase really makes it easy for even my mom and dad to use Bitcoin.
Would you say the consumerization of Bitcoin is its biggest potential barrier?
Yes, it definitely is. It has to go from being only used by the hardcore nerds to being used by everyone, right? Everyone, including poor people in Africa, should be able to easily access the Bitcoin network.
No, I agree. I do want to break the interview into a couple of segments, though, starting on Litecoin itself and then moving to the tech and then moving to the community. So if we start with Litecoin and broader kind of meta view from it, it's previously been described as silver to Bitcoin's gold. So for those that don't know, how do you describe Litecoin?
Litecoin is a more nimble version of Bitcoin. It's faster in terms of transaction speed. It has 4 times the block space. So right now it scales better than Bitcoin and transactions are faster. And also because we have a smaller team and a smaller community relative to Bitcoin, we're able to move faster in terms of adopting new technologies. And we also have a lot less drama and more agreement about where the direction of Litecoin between the developers and the community and the miners.
So does that leave Bitcoin as a store of value, so to speak, and then Litecoin as a kind of transactional value piece? Is that the kind of thesis?
Pretty much. Bitcoin is going to be the best store of value, and Litecoin being faster, more nimble will be, and also have cheaper fees, will be better used for transactions as a payment method.
We spoke about kind of the speed there and the better tech. One of the largest problems for Bitcoin is always the issue of scalability. How do you think about this with regards to Litecoin? And then how does that really compare to Bitcoin and Ethereum?
The problem Bitcoin has with scalability is that it's a trade-off between decentralization and scale. So to some people, they think that increasing block size is the simple solution. You just increase the block size and you can have twice or 8 times more transactions in a block. But by increasing the block size, you are causing Bitcoin to be more centralized because it will be harder for people to run nodes. So it's a trade-off. Developers of Bitcoin and I all agree that Bitcoin really needs to err on being the most decentralized cryptocurrency out there and scale slower or scale off-chain using layer 2 technologies like Lightning Network. On the other hand, for Litecoin, we can find a different kind of sweet spot between decentralization and scale. So Litecoin has 4 times the block space of Bitcoin. So it's a little bit more centralized, but can have a lot more transactions in the blocks and it can scale better.
Absolutely. And compared to Ethereum?
Ethereum actually has a lot harder problems with scalability because Ethereum is doing a lot more. So for Bitcoin and Litecoin, the goal is just to be currency, right? All it does is be able to transfer value, and it does it really well. For Ethereum tries to do pretty much everything because using the programming language, you can write any kind of programs. The problem with that is that every Ethereum piece of code needs to be run on every single node. So that makes a really hard problem to scale. So I think in the future, Ethereum will really run into a lot of scalability issues.
I'm intrigued. You said there about kind of the ability to write their own code for developers. Brian said that it was one of the greatest benefits of Ethereum over Bitcoin being the ability to write more complex software on the tech stack. How do you then think about this with Litecoin, the centralization aspect, and then kind of building that complex software within the tighter developer community?
For Litecoin, we're looking into adding more programmability, like more smart contract stuff. So we are definitely going towards that direction, but we won't be doing something to the extreme of Ethereum where it can do everything, because there's a trade-off. If you can do everything, then you don't do anything really that well. Right now, Litecoin and Bitcoin does value transfer like extremely well. So we will stick to being mainly for value transfer, but adding more programmable money aspect to it.
I think kind of to me, one super interesting element to Litecoin is the lack of forks, so to speak, in its history. For those that maybe don't know, what does it mean for a cryptocurrency to fork?
So what holds a cryptocurrency together is that everyone is running the same piece of code, or at least code that has compatible consensus. So in the case of Litecoin, everyone agrees that blocks happen on average every 2.5 minutes. Everyone agrees that the total number of Litecoin ever in existence will be 84 million. Everyone agrees that Litecoin is mined by machines that does script calculations for its proof of work. So, and that kind of holds and binds the coin together because everyone's running the same piece of code. So it's easy for you to fork off. If you run a separate piece of code that says Litecoin can have 200 million Litecoins in total, then you kind of just fork from the chain and you're running your own code. But because you're by yourself, your fork is not going to succeed, right? No one's going to be mining it. No one's going to be using it. So it doesn't really matter. But if like a major part of your community wants to do something different, as in the case with Bitcoin recently, the Bitcoin Cash or Bcash fork, people did not want SegWit and also wanted 8 megabyte blocks. So they forked off. Some miners are willing to support that fork. So that's what happened with Bitcoin.
What do you think then are the reasons behind wanting to fork? Are there benefits and massive detriments to forking?
Yeah, so it's best if everyone stays together, but if there are irreconcilable differences between the community, community, which there was. That's why forks happened.
Can I ask a really stupid question? In terms of kind of such discontent within the community, who's the ultimate adjudicator in a completely decentralized network?
There isn't one. That's why the forks are so unpredictable, and you never know when consensus get formed where a fork will actually happen. And the other real problem with forks is that both sides want the name Bitcoin. So they both think that their idea of Bitcoin is the real Bitcoin. So who actually wins is a really tough question and really tough to resolve in a decentralized community and cryptocurrency.
Who does win?
Consensus actually just forms by itself over time.
Is it not also inevitable that every cryptocurrency will fork eventually then, if one kind of comes to the conclusion that humans will always disagree with regards to kind of functionality and usage? Eventually, will every crypto not fork?
It's hard to say. Like Litecoin hasn't experienced any kind of pressure to fork. I think there are so many other cryptos out there, so if you disagree with the direction of a crypto, it's always easier for you to just join another crypto community.
Question though from Alex Mittal at Funders Club. Litecoin was always viewed as Bitcoin with better tech. Now Bitcoin maybe has successfully fought. Will Litecoin continue to differentiate itself on better tech?
Yeah, because we are always able to move faster. The reality is that Bitcoin is a $70 billion coin right now, whereas Litecoin is only a $3 billion coin. So it's a bit smaller, and because of that, we are able to take more risks to introduce more newer technologies before Bitcoin.
How do you think about those risks with scaling?
So being able to take more risks also means that we're able to scale better. So for example, Litecoin was able to activate SegWit back in April, May of this year, whereas it took to August before Bitcoin activated SegWit. So technology like that, which is obviously a benefit and helps with scaling, Litecoin is able to move faster in that regard.
Mm-hmm. Talk to me about the exciting development of SegWit and Lightning Network and how that differs then from on-chain transactions and why this form of scaling works best. And maybe also a definition of SegWit and Lightning Network for maybe some that aren't aware.
Yes, the major feature of SegWit is, so SegWit stands for segregated witness. What that means is signatures for the transaction is located in a different part, is segregated from the rest of the transaction. The reason why we need to do this is because previously transactions are hashed into a transaction ID, and the signature is part of that hash. But the deal with signatures is that it can be changed without changing the transaction itself. So the hash of the transaction can be changed. So the transaction ID could be mutated by a third party. And doing that, you can't really chain transactions together, because if you want to say transaction A depends on transaction B's output, and then all of a sudden transaction B's ID changed, then the transaction A will be invalid. So this is called transaction malleability, and it affected a lot of companies where you send a transaction out and then you use the output for that transaction expecting that to work, but someone mutated the signature and all of a sudden your second transaction fails. So without transaction malleability, without the ability to train transactions, you can't do something powerful like Lightning networks. So segregated witness, what that did is it moved signatures to a different part of the transaction and only use a non-signature part for transaction ID. And that made it so that transaction malleability is no longer a problem.
We spoke about the developers and the community earlier. I'd love to kind of analyze the differing developer communities across Bitcoin, Ethereum, and Litecoin. Brian said that Bitcoin was potentially more ideological and divisive. Talk to me, how do you analyze the different developer communities?
I think Bitcoin communities is larger, and so there's more disagreement within the community. And also, I think for Ethereum and Litecoin, the communities are formed from part of the Bitcoin community, and it's more focused towards the direction of where Ethereum and Litecoin wants to go.
You recently tweeted about a miner mining BCH at negative $300,000. Talk to me about this and your thought process around this and why it's significant.
What I actually tweeted about was that a miner or a group of miners is leaving $300,000 on the table every day because they're mining BCH instead of BTC. Basically, if they were mining BTC, it's using the same hardware. If they were mining BTC, they would make $300,000 more. So what they could have done is mine BTC, use that money to buy BCH, and they would actually make a lot more BCH. But by doing that, they're also BCH will kind of fail, because if no one's mining it, then there won't be any transactions. So they are supporting BCH for ideological reasons as opposed to profit-driven reasons.
So talk to me about these individuals, and we can kind of do a 60-second per one on each. Where are the miners based? Is there a kind of concentration hubs
for BCH?
Let's do for BTC.
Okay, so miners are geographically all over the world, right? So you can mine, anyone can mine. That's by design. So because miners want to make profit, they are mostly located in places with cheaper electricity.
Okay, so are there hubs of miners though? In terms of, is Shanghai a hub? Is Moscow a hub? And how do they make money from mining?
They make money by finding Bitcoin, Litecoin, BCH, Ethereum. They find blocks, and the blocks include a certain number of coins, and that's how they make money.
Okay.
So all the miners do is they take all the transactions, put in a block, and they hash it. They do some work on it, and it takes a while before they can actually confirm that block.
How loyal are the individual miners to their individual currencies? Is there kind of great friction between switching, or is there continuous switching between?
Most miners, all they care about is making money. So, and that's fine, and that's how Bitcoin works. If all they care about making money, then they have no loyalty to any particular cryptocurrency. So for example, GPU miners are able to mine thousands of different currencies. So there are like pools that jump between different GPU mineable currencies and mine whichever is the most profitable and sell that for Bitcoin or Litecoin or whatnot.
Do you think community can be a kind of core IP for a currency as a store of value if it does have a very integrated and strong community? Do you think that can kind of sufficiently provide strength to the value of the currency itself?
I think initially, in the beginning, the community is most important. So, for example, Litecoin, initially it was basically the community are everyone that's mining, right? Litecoin initially was mined up by CPU, so everyone can mine. So that's the initial community for Litecoin and even Bitcoin in the beginning. It's all miners that believe in a currency and are mining currencies and hope that it would increase in value. As it grows, the community becomes more like speculators or traders and investors. So right now, even for Bitcoin, most people who own Bitcoin are speculating that the price will go up. But for the long term, the community wouldn't matter as much because it's all about using it as a currency. And for example, right now, is there a community around the US dollar? There isn't. People don't care, right? I think in the future, that will be the same for cryptocurrencies, where in the long term, the community doesn't matter as much. It's more about just being able to easily use that currency.
You said about speculation and trading there. Do you ever get the feeling it's a little like the Wild West in terms of 80s Wall Street days, people making a lot of money very quickly off relatively opaque trading?
Yeah, it definitely is the Wild West. And if you look at ICO this year, where thousands of people who have just some idea in a white paper and a website can create an ICO, and speculators jump in and pump the market, and everyone makes money from it. So,
do you get worried by that?
I do. I get very worried about that, because you can't just create money out of thin air, right? So if everyone is winning, then who's losing? It just means that there is this bubble where people are holding onto these ICO tokens that in reality aren't really worth anything, because it's based on tech that is not any good and based on a team that probably already made a lot of money and have very little incentive to keep working on the product. So I fear that there's going to be a huge crash in the whole ICO market sometime soon.
What would happen if that happened?
I think there will be a flight to quality. So people would sell their tokens for Ether and potentially sell their Ether for Bitcoin. So it would crash a lot of the ICO tokens, a lot of the altcoins, but I think it would be good for the stronger currencies out there like Bitcoin and Litecoin.
Would you say that's your biggest concern today with regards to crypto?
Yeah, I would say that's the biggest concern, is the ICO market crashing.
I'd love to finish though with a quick fire round. So I say a short statement and then you give me your immediate thoughts, about 60 seconds per one. How does that sound?
Sure.
So let's start with your favorite book and why. What should I read on my next plane ride?
My favorite book is George R. Martin's A Game of Thrones. It's what the Game of Thrones TV series is based on. It's a really awesome book. It's long, but it's one of the most amazing books I've read in the past decade.
Was there ever a time that you doubted the potential for Litecoin?
Yeah. Well, initially it was more for fun, right? I didn't expect it to be what it is today. It was just a project I did on the side side that was fun to work on and had a small community. In terms of it really becoming big, for a while, Litecoin was just there and not really much is happening. So I didn't think too much about it. I kind of put it on the side and didn't spend much time on it. So I guess around that time, you could say I doubted that Litecoin would become big.
When was the catalyst?
2013, it had a huge jump. It went from like under $1 to $50, around $48, $50. And that was right after the Bitcoin pump that took Bitcoin to over $1,000. And then it kind of dropped again. Both Bitcoin and Litecoin dropped like by a lot. Bitcoin dropped to almost $200. Litecoin dropped to like $2. And then this year, both coins really surged back strong.
What's the biggest misconception of the crypto market?
Biggest misconception, I guess it would be that people think you have to buy one whole Bitcoin or one whole Litecoin. People didn't realize you can actually buy like a small portion of a Bitcoin. I guess that helped Litecoin in some sense, where people look at Bitcoin and like, oh my God, that's so expensive. I can't afford it, but I can afford a Litecoin, so they buy Litecoin instead.
Yeah, absolutely. Talk to me. What do you believe that most around you disbelieve?
I guess I believe that cryptocurrency will take over fiat currency and become like the reserve currency, or Bitcoin will become the reserve currency of the world, where everyone would base everything on cryptocurrency. This is something that I really believe would happen eventually, and it's pretty far-fetched for most people.
With completely decentralized currencies or kind of national cryptos?
Completely decentralized currencies. People have freedom of money.
Talk to me. Let's finish on, what's your vision and dream for Litecoin? 5 years' time, what would be the ideal outcome?
My vision is people would use Litecoin every day to buy things. Like, it would just be the payment method of choice.
What's stopping that at present then?
Ease of use. So I think what's stopping all of cryptocurrency is just ease of use. It's not easy to store Bitcoin, Litecoin right now. It's coming along. Hardware wallets are making it easier. What I mean is to be able to securely store it. Right? You can easily store Bitcoin, Litecoin on your phone, but you can easily get hacked, or you lose your phone and you lose all your money. So being able to securely store it and still have easy access to your money is the holy grail of crypto. Once we solve that, then it could take over.
Charlie, as I said, I heard such great things from Brian, so I can't thank you enough for joining me today.
Thank you, Harry.
I told you, a very special episode, and I'd like to say a huge thanks to Charlie for giving up the time today to come on the show, and you can find out more about him on Twitter by following @SatoshiLite, and also I'd like to say a huge thanks to Brian Armstrong at Coinbase for the intro today, without which this episode would not have been possible. Also, we'd love to see you behind the scenes at the 20-minute VC, so you can follow me on Snapchat @HStebbings with 2 Bs to see all things behind the scenes here, and suggest future guests and questions for future episodes. But before we leave you today, if you're an early stage startup, the right infrastructure and support systems are critical, and that's where First Republic is so good. First Republic's resources, network, and expertise allow entrepreneurs to customize a solid foundation for your business across all stages. So why First Republic? Well, you get to leverage their incredible network of VC firms to prepare you for future fundraising events. You get to count on a single point of contact that will be there for you and your employees when you need them. You get access to exclusive events and networking opportunities. But don't trust me on this. Their clients include the likes of Instacart, eShares, and Wish, just to name a few. Check it out by heading over to innovation.firstrepublic.com. And speaking of incredible startups there, one that really is a must is Segment. Why? Well, Segment allows you to collect data from every platform, mobile, web, server, cloud apps, and load it into Segment. Segment then sends the customer data to your tools and destinations, where it can be used most effectively. Destinations include email, analytics, warehouses, help desks, and with over 200 sources and destinations on the Segment platform, that can really empower your team. Segment really is the last integration you will ever do, and that's why the world's best companies use Segment to drive growth and revenue, including the likes of Atlassian, New Relic, and Crate and Barrel, just to name a few. Simply head over to segment.com to find out more. As always, we so appreciate all your support, and we cannot wait to bring you next week's episodes. Have a fantastic weekend.